Hey everybody, welcome back to another beautiful day in real estate. Today we've kind of all over the board. So we were diving into a little bit more on Kevin Warsh this morning. We were listening to a majority of the last meeting with the senators, essentially talking about, questioning him. It was an interview process, if you will, before he gets confirmed or supposedly. I don't know. After watching a bunch of that, I'm kind of wondering if he's not going to get confirmed beginning of this next month, and we might actually see Jerome Powell stick around for a few more months. Kind of an out there opinion, but there's some things that I was kind of excited about to hear from Kevin Warsh, other things I wasn't. But there was one thing that really stuck out to me was we're going to talk about it today. He talked about AI and the benefits for it. So, as always, let's jump into interest rates. Interest rates relatively unmoved again, you guys, a little bit down from yesterday, very, very, very slightly. But we'll just jump into oil. Oil prices, you guys kind of did exactly what we expected. So here's what's going on. We've noticed that the ceasefire was extended, right, which drove markets down slightly. And then they said, well, the blockade's still in effect. And markets went back up. Why? Because oil is not moving through the Strait of Hormuz, right? So now we're talking about a constraint for supply. When we have a constraint for supply, obviously, it's just like everything else, supply and demand. If we need a high demand and a low supply, prices go up, right? That's just how economics work. So there's still a blockade in place. I did just read an article this morning that Trump said that any ships dropping mines into the Strait of Hormuz will be decimated, essentially, which I'd say is pretty fair. I mean, if you're trying to drop mines in the ocean, right? Anyways, right now they're working on a deal. The ceasefire was continuous with no deadline, which was part of the taco conversation again, right? Trump always caps out, whatever you call it. But essentially, they're saying, well, Trump is not actually going to follow through with his word because, well, it would mean a lot of bodies, essentially, right? But anyways, long story short, oil made its first move up from the bottom we kind of talked about. We had that consolidation between 86 and 92, found it right down here at the bottom, about 85 actually, and then we moved up. Now we are doing a test off of the previous support and resistance, right? We had big support here. And again, this is the most recent. So the charts back here are obviously pretty irrelevant considering it's been a long, long time since we've even hit these numbers. But if we go all the way back to September of 23, right, oil prices were this high. We go farther back, we had oil prices in November of 22, October of 22, found a somewhat support back in August of 22, right? So this trend line is pretty consistent, meaning that bouncing off of this trend line is trying to find a support, right? So if we don't see anything come out pretty soon here saying the Strait of Hormuz is officially open, there's a peace deal in place, whatever the case might be, oil prices are going to continue to make the next leg up, which is going to be 101 to 115, depending on where it lands, right? Most recently, that 101 is going to be the next support or resistance, However, if we look down here on the technical perspective for the stochastic RSI, it still hasn't broke between the median, which is essentially 47, 45 area, right? To 45 to, what do we got? 50, 47 to 50. Once it breaks above here, then we have a little bit more of a bullish trend. Now, something that I did notice as well on the RSI is the RSI, if you kind of pay attention down here, it broke through that downward trend, right? But it also isn't finding very much support here in the middle, right? So again, when you're looking at RSIs, if it breaks above that 50 towards 75, that's more of a bullish sentiment. Anything below that is going to be more of a bearish sentiment, right? So this bounce could hypothetically, based off of what I'm seeing here, we'll have to see how the next couple of days progress. But unless we see some upward action, this might be a fake out. We might be heading back down. I just don't think that's possible right now. I think with what's going on in the world, we're probably going to see oil prices go back up to $100 a barrel. This is again WTI crude oil spot US dollar. I feel like I have to clarify this. Somebody mentioned it in a video or comment in a video a few weeks ago about, oh, that's just futures. No, it's not futures. I don't give a shit about futures right now. I care about spot because that's what's going to be affecting the market. Futures, at the end of the day, all it does is really kind of give you a somewhat of a prediction of what to expect here, with something in a short term moving forward. And if you're trading futures, you're a better trader than I. But we saw a movement up on the bond pricing yesterday, but bond pricing came back down. And we're going to talk about that in just a short minute. Why, right? So this right here is a very, depending on which way you look at it, it's a bearish signal, though, right? Okay, so just so you guys know, blue is green, purple is red. it's a psychological thing. I don't use red and green anymore. I haven't for a long time, just because to me it didn't make any sense to do it. It's a psychological thing. When you see red, naturally your heart starts racing. When you see different colors, anyways, long story short. So purple's red, right? We saw the prices bump up and they came right back down, right? If it closes in something similar to this notion today, that's going to prove to me that we're heading back down. Again, I'm not seeing very much action here, right? It's kind of coming down. Let's see here. Yeah, it's not enough. That's not enough. Anyways, so we're seeing movement upwards, right? And then we saw a bunch of negative pressure. But why? Well, we saw a bunch of negative pressure because the United States bought their highest buyback ever for debt. They bought their biggest debt back yet, right? Which was $15 billion in one freaking day. One freaking day. $15 billion of debt bought back by the U.S. Treasury. What does that mean? We'll talk about that in just a minute. But to me, what that means is, you know what? Let's move this. We're gonna jump into that next. But to me, that just shows that, again, they're trying to keep bond prices down. This is the 10-year Treasury bond. By keeping the bond prices down, brings interest rates down, or at least keeps them where they're at, right? Which is somewhat doable at 6.2 to 6.3 for conventional and 5.9. I mean, 5.9 for an FHA and a VA is pretty fair rate for what we've seen in the last 2 years. And you know, my boss told me this when I started at building. I said, "Oh, interest rates are too high. That's why people aren't moving." Do you want to know why people aren't buying houses? It's because they don't see the value in it anymore. That's why. They aren't in a hurry to do it anymore. Their market froze because they brought interest rates down to the 2% range and in the low 3s, 2% range, whatever it is. And then what happened is people got all this equity in their home, but they're not selling their home because why the hell would they? Because again, you have a $500,000 house here. If you want to downgrade, it's going to cost you probably $550,000 to $600,000 for a similar style home that's going to have, I shouldn't say style, a similar updated home, right? So if you want a 1-level patio home and you go from a 2-level, you're going to sell for 500, more than likely going to have to pay 550, 560,000 over here, right? So most people don't see the justification. People that are moving right now are doing it because they have to. The customer that I just sold a house to last week, they're moving because they have to. They have a 4-level home on a golf course, and you know they're saying, you know what, we can't do stairs anymore. We need to be on a 1-level home. But other than that, people are frozen in their homes because they have good interest rates. They're not behind on their payments. And why would you move if it doesn't make sense to move if you have to pay more money for a house for less room? People aren't moving unless they have to, right? That's not to say the market's not moving, but it just means that that's why there's such a freeze in selling going on right now, because there's low inventory. So those who want to move, they have opportunity, but not as much, right? And those who are, who may want to move, they don't really, there's not much out there, right? This gap is shifting. Like, what was it? Like 28%, 38%, 28% is what I read the other day. Where homeowners have above 6% interest rates now. It was basically, it was across and the cross, or yeah, I don't know, the other way around, whatever. But basically it showed that people with 3% and lower, or 3% interest rates, 4% interest rates and lower, was less currently with people who have 6% interest rates or higher right now, which means that the market's shifting, but there's still a ton of people that are locked into their homes that aren't going to sell until interest rates come down. So again, that 15 billion buyback in treasuries, right, is what's helping keep that bond pricing down. By helping keeping that bond pricing down, it helps keeps interest rates where they're at. But it could bring it down, right? It could bring it down. I don't know why my hair is looking goofy today, but it could bring it down. But here's what I'm actually really interested about, right? Not only the bond pricing, again, we'll find out tomorrow morning what to expect. And this is Thursday morning, right? Market opened 27 minutes ago. So we don't really know what to expect just yet. We haven't got a lot of news on everything yet. We haven't got a lot of stuff, but let's talk about it, right? Okay, so we'll break it down for just a quick second. The U.S. Treasury bought $15 billion of its own debt in a single day, the largest buyback in history. In a single day, $15 billion. Okay, and here's what this means in plain English. The government is essentially buying back loans it took out years ago before they're due, because that, again, by buying them back, it sounds responsible, but the reason they do it matters. Excuse me. I don't know why I couldn't talk there for a second. When the Treasury buys back old debt, it pumps cash into financial system. Banks and investors who held the debt suddenly have money to invest. Buying bonds. It's a way of injecting liquidity without calling it what it is. Quantitative easing, right? The timing is worth noting. Markets have been volatile. Confidence in the U.S. debt has been shaky, and foreign buyers are quickly selling off their U.S. treasuries. Why? Because they aren't confident that we're going to be substantially, that they don't feel their money is safe in those treasuries anymore like it was for the last 50 years. A record buyback right now is either very good housekeeping or a sign that they need to do something fast. The Treasury says it's routine, $15 billion in one day, a new all-time high, straight in the middle of a trade war and a shooting war, routine. So Scott Bessent right now is ahead of the Treasury, right? And Scott Bessent is talking about reinvesting and creating
what we call AI in a couple.
What are you doing? There we go. So he's talking about bringing interest rates down and making things more affordable. He went in front of the Senate the other day, and I'll be honest with you, it was not pretty for the Senate. They asked some dumb questions. I never really understand these hearings because they never really ask real questions that are benefiting anybody other than trying to make the senator look good. My own opinion of government, whatever. But basically, they're working on ways to create lower interest rates. Now, I was listening to an interview today, or news. It was posted 19 hours ago by Fox News talking for the, hold on, let me figure it out because I had it on my phone. Okay, the HUD FHFA announced major shift in housing. So essentially, I'm about halfway through the video. I'll break it down tomorrow. But they're talking about how rent can now be actively reported on your credit score. Well, how does this help? Well, most people who have been renting their entire young adult life or their entire adult life, they don't have credit build up because they didn't get credit cards or they didn't take out loans, and they can't buy a house. Or those who do have credit cards or do have car loans, right? Like maybe it wasn't enough to help build it. And that's a big restraint. That's a huge restraint for people that are renting, right? Because they feel like if they don't have a credit score, banks can't lend to them, right? And I mean, they're not wrong in a lot of cases. So for them to now make it available for people to report their credit, report to their credit scores that they're paying their rent on time is going to be a big beneficial thing for buyers. Again, it's not going to fix the housing market, but it's another step in the right direction, right? There's a landlord here in town that I know, Bill Dean and Casey Bernard. Both of them have been in, well, Bill's been in real estate for quite some time, and what they do is they actually charge rent. And I just watched one of their videos, which is crazy, but they charge their rent $800 was the number they used, and the rent was $836.50. What was the $36.50 for? It was for them to be able to report your rental history to your credit score, so that people who pay on time get to report that credit. But now it's just across the board, they're going to be able to do it, right? Which is really, really helpful for buyers out there because credit's a big thing. Like, not to get on another tangent, but if you guys look at the financial credit system in China right now, it is not looking pretty. But that's a conversation for another day. But next, we're going to talk about Kevin Warsh. So buybacks in the Treasury market right now. Kevin Warsh is supposed to be the new head Fed president, and he's been all over the news lately. Obviously, I mean, he was in front of Elizabeth Warren, he was in front of Kennedy, he was in front of a bunch of different senators, and they were grilling him about his alliance to Trump. Which, honestly, again, I get why they're doing it. He's an appointee under Trump, but I just feel like it was a worthless conversation. Like, what do you expect people to say in that moment? Like, yep, I'm going to follow whatever he tells me. Like, no, dude. Why? Nobody who even is going to be doing that is going to be saying that on live TV. So it's just whatever. But here's something that stuck out to me. He talks about AI, talks about finances. So just bear with me for a second. We'll talk about it.
What we call AI in a couple of years, we'll just call business. And AI is going to make almost everything cost less. And the U.S. can be a big winner. And it's a hugely exciting moment. If I were to step back for a minute.
Okay, something he said right there. AI will make everything cost less. Again, let's look at this from the internet's perspective, right? The internet but really rose to fame in the 99 to 2000 range, right? We saw the great .com bubble where all these internet companies crashed. Here we are, right? at that time, they were saying that internet was going to take all these jobs away and it was going to destroy people's lives, et cetera, et cetera. And now it's integrated in literally everything you do. You have a computer in your pocket 24/7. And most of us, we don't even get off our fucking phones longer than 15 minutes before we go to bed. And we're on them every single day, all day long. Again, I see a similar complex here to AI. AI is going to be a more effective way to use technology for the benefit of human people. But at first, it's going to take a transition period. But when you use AI, you have less people that you need to pay, which makes product cost less. Okay. Now, people say, well, that my job's going to get taken away. Blue collar jobs are no longer safe as they once were. Or white collar jobs, excuse me. White collar jobs are no longer as safe as they once were, right? Because you can use AI for trading, and they're making bots that trade the stock market with AI, et cetera, et cetera. But what it does is it also gives people, to the positive notion, it gives people the possibility to create businesses a lot more efficiently or effectively, and with a lot less people, a lot less needing to know, right? I mean, if yesterday I was doing a chart and I pulled up a chart from Claude asking about North Dakota's data, and it spit out all the data, went through every website, went through every talk about it. Like, that's what AI should be used for. People still use it as a search engine. And again, it's more of a beginning of the internet space versus where we are now, right? So just imagine yourself in 2000 when you got the internet and it was dial up and you heard the, when you're connecting to the internet. People thought that was really going to take over their jobs. It was going to screw people over. It was going to, whatever. But here we are, right? It's a part of everyday life. So again, the integration is going to be the same. So apologize for the tangent. Let's finish this up real quick.
If I were the president, what I'd be worried about is a central bank that doesn't see any of that. A central bank that is stuck with models from 1978, governance from a prior period, and don't recognize we could be at the front end of a productivity boom. And if I were the president, I'd be worried that they might not see it. And they might think economic growth is somehow going to be inflationary. I think we were probably in the early innings of a structural decline in prices. Ken sees it on the front lines of real businesses. And I think if you look over the period of the next year or two, it's a pretty special moment. What we call AI.
So here is where my expectation is. Trump didn't pick Kevin Warsh to drop interest rates, which everybody's saying, oh, he was picked by Trump, so he's going to drop interest rates. I think he was picked to revolutionize the way that our financial system works. Okay? The way he talks about this. He talks about innovation. He talks about growth. He talks about becoming the next big person or next big country to innovate as we did after World War II. We can compare this to World War II a little bit more as the weeks progress. And what I mean by that is there was an explosion of growth for that time. Things were unregulated. There was a lot of things that happened. We saw some inflationary periods, but there was a lot of growth after World War II, which I expect probably will happen after these wars end in Iran and in Ukraine and Russia. That's what I'm looking forward to. I'm going to always be an optimistic person until the world starts on fire around me. I'm going to say that the world's all sunshine and rainbows. No, I'm kidding. But what I am going to be paying attention to is, again, instead of saying everything's hopeless, let's focus on how we can create a solution and learn more about it. I work in real estate every single day. My whole thing about real estate is to create solutions, right? When I learned that you shouldn't be selling somebody a house, you should be selling them the solution. That's when it shifted for me. That's when I started helping people. That's when I became a better realtor, a better salesperson, because I decided that I was going to help people, not try and sell them something. And that is the benefit behind what we're looking at now is, okay, pay attention to what's happening, anticipate, kind of compare as much as you can, right? We compare 2008 to 2026 all the time. Let's compare 2000 to 2026. Let's talk about the internet boom, right? Not the negative crises. We've talked about that. We already have that in the front of our mind. We're worried about the debt crisis. We're worried about those things. I haven't seen much news on that. I'll jump on that soon again. But bring it back, right? Now we're talking about AI. We're talking about being more effective with our systems in businesses. We're talking about less people, so more profitability. We're talking about a cheaper way to develop things. That's what's going to benefit us over the next 20 years. And I think that he's going to be paying attention to that and utilizing it to update systems, whether that's payment systems, which Trump ran on, right? Cryptocurrencies, blockchains. He's talking about, better management of these programs. He's talking about, again, not to get too sidetracked because I know I just went on a ramble this entire video and I do not give a shit. Pay attention to what's going to be happening over the next month and a half. I think that the next month and a half is going to be very interesting. It's going to be very volatile. And we're going to pay attention to oil prices, you guys, because again, until we see this So we see things again. The Treasury's kind of made their way down. We're going to see how oil prices stick at the end of this week. We have one more day in the market before the weekend. Chances are we're going to see some off-color shit posted here on Twitter or Truth Social by Mr. Trump, and things are going to be a little wonky moving into the weekend. But anyways, that's what we have today. Thanks for watching. Have a blessed day. We'll see you tomorrow.